All right, 9:26, and we are at the end of the year. And you know, if you're like me and following the headlines about the possible new tax code that they're trying to rebuild in Congress, you're wondering, okay, how is that going to affect me going forward? So we thought we'd get some answers, talking finance with Andrew Lattimer of BlumShapiro, Eric Hogarth of Johnson Brunetti. We say good morning to both of you. And
good morning.
I would imagine for both of you, in the world of investing and taxes, everything is up in the air right now, isn't it?
Yeah, it is. With the new tax reform, we know those changes are going to happen for 2018, but there are some things that you should definitely be thinking about to do for 2017.
Well, let me ask you right out of the gate. If an agreement in Congress happens, will this affect paying taxes come next April 15th?
It will affect you in the sense that knowing that some of the big things that they're talking about, like state income tax deduction is going to go away. That's one of the things you should think about for 2017, actually prepaying either your property tax or your state income tax so that you can get that deduction in 2017.
Which is the second part of this equation here, because whether things change or don't, there are things in the last couple of weeks of December that you could do to prepare and maybe save a couple bucks in your pocket.
That's right. So you'll pay those taxes, you'll pay state taxes or property taxes that might not be due till January or even April of 2018, but pay them in December of 2017 so you get the deduction to help reduce your federal taxes.
Yeah. Let's take the money forward and bring you into the conversation. Investing 2018. Do we really have to think about different ways of doing it, or same old, same old?
So there's potentially going to be some changes to how you take gains right off of positions. And this brings us to right now, as the market, obviously, as we know, is very, very high. And people are thinking, will this continue forever? Of course not. But as you look at the end of year, and should you be harvesting some of the gains, there could be changes to how those are taxed, where your trades are occurring next year, that as of right now you can still take advantage of. So
like
look at that.
Where can I
Capital
deposit
gains.
my money?
Presently, right now, you can determine which shares of stock you're going to sell. There's a possibility next year that it's the first ones you bought, which is a big deal. As far as investing next year, remain aware of the fact that things aren't going to go up forever.
All good things must come to an end, sort of, or at least slow down, maybe.
It's very exciting, but be mindful of the fact that it's gone up for a long time, and now with tax changes, perhaps save as much as you can of those gains.
If I came into your office today and said, okay, take my money, now figure out what's the number one thing that I should do, that I should protect myself with, what would it be?
I think the number one thing that we would tell you is we look at your projection for 2017 and see where we could save some money, whether that means maybe deferring some income because maybe tax rates go down, or maybe accelerating some deductions that you wouldn't be able to take going forward.
Agreed? The deductions are the key.
Deductions are key, but one of the big questions is always, what's the money for?
Right.
Because if you don't need it today, don't get taxed on it today. Be strategic in the planning you're doing. If it's not for a year or a month or 5 years or college or retirement, save as much as you can on taxes.
This is the first time the tax code is going to be rebuilt in about 25 years.
Long time.
1986.
There you go. So is this really going to throw a lot of people into the blender, so to speak, and how they're going to come out April 15th may really throw them for a loop?
Yeah, I think so.
Yeah. Okay, so get over to your guys, your accountant, your financial advisors, and get the advice now.
Absolutely.
There you go. That's the best advice. We appreciate it, gentlemen. Thanks for coming in.